Good morning, everybody. 6 a.m. here on Monday. Canada, we just had our first snowfall today. So, welcome to winter, guys. Welcome to winter. Here's Bitcoin on Binance. Bitcoin on Binance. What I wanted to do today is go through an Elliott wave video. Because I do have a wave count, I want to show you guys something very interesting that I found in the charts. So let's go right to it. This is the wave count that I have, okay, right here. And if you guys know the principle and the guideline of the wave principle, what he says, if this is the wave 3, which I'm not sure yet, guys. I mean, the alternate count is going to be like this. This is wave 1, 2, 3, 4, right, and 5. But the way I have it drawn right now, I like it. It's more like proportionate, I would say. But the main point that I'm trying to say here is that Robert Prechter, what he says about the Elliott wave principle is that if wave 3, which is this one here, is extended, which it is, this one, if wave 3 is extended, then wave 5 will be similar. And once again, it's a guideline, it's not a rule, but it will be similar in time and price. Okay, if you guys remember that rule, and similar in time and price. And one of the ways that you can confirm that the bots or the big money hedge funds are actually using this rule is by looking for a little bit more confluence. And that's what I did today. That's what I found today. I'm going to add this on the 1 hour chart, okay? Because I want it to be very simple and easy to see. But let me go ahead and explain a little bit of what I did here on the chart so that you guys are 100% in tune. And the thing that I found is that, so if you take the box here in terms of percentages, I added the percentages here. In terms of price as well, I added it there as well. So this is basically the exact wave 1 of right here. But the thing that's really, really interesting is that it lines up with the new year exactly. So I put it at the bottom here. It's the same 90, what is it, 92 or 93? It's 93 days. So let me add 1 day to it. Because it's really the trend line, this trend line. This one right here. So 93, I added the trend line there too. Yeah, so follow the trend line, and that's where it is. So it's at the yearly open. So what does that mean for Bitcoin? What does it mean for Bitcoin? Let's go ahead and take a look at the yearly chart right before we go to the hour chart, because I want to see like what's going to happen next year, right? Because if it closes, the fifth wave closes right here, the start of this candle right here, what's going to happen? You know, are we going to get a huge sell-off for half the year and then start to come up again? This is a good question to ask. Now we look at the yearly chart. This is what? 1, 2, 3? Meaning 1 in 2019. This is 1, 2, 3, 4, 5. Extended fifth wave of a third. That makes kind of sense. But 2019, where was 2019? 2019 was right here. So this would be the count, but it'd be the count of a bigger one. This is the data we have on Binance, so we don't have all the data, but on Binance it kind of looks like this, right? 1, 2, 3, 4, 5, all the way up there. I don't have enough space. something like that. So that's kind of something that we are going to think of. This correction to the downside took 1 year, like exactly 1 year, like 365 days, guys. So if you take it from the top to the bottom, yeah, if you actually find the bottom, it's like 365 days. From this one here to the top, took 194 days. From the bottom, took 262 days, 260 days, about 400 days here. So we have to ask ourselves, are these mathematical numbers, right? Mathematical proportions of a type of degree? Probably. I don't have the knowledge today of that. But what I wanted to bring to your attention is that the bots were defending this ratio. I just added it. Where is it? Yes, this one right here. So this box I took from wave 1. Once you move it upwards, it starts getting smaller, just how the grid works. But you can see that exactly right onto the dot here. This is technical analysis, guys. You can take this with a grain of salt, but the main point, if you want to make money trading this, is that you have to make RR matrices, RR patterns, right? That's what I plan on doing, on making an RR grid. An RR grid. If you know what that means, you know the risk reward grid, where there's high probabilities and there's high risk reward. So you basically just add these grids up and you ask yourselves, are the bots still using? You know, has it been respected? Has it been respected? And you'll see, like on the daily chart, it has better wicks. Maybe on the 4-hour chart, it has better wicks, and if it's been respected. Because you have to think about the markets in terms of robots, computers. They're literally perfect because they have set degrees, they have set conditions, and I'm just kind of like a discretionary TA, so I'm not exactly perfect on the lines here. But once you know how to do the indicators and you know how to multiply these things, because these guys they know what they're doing when it comes to PineScript or Python, and they just basically take the first wave and apply it to the bottom, and then they multiply it, and then it looks something like this, and then they trade based off of this. And not only that, guys, I'll show you something a little bit really cool. They'll use other confluent reasons for entry. So this one right here is the 50%, and like this, where we're getting rejected right now, that's kind of a confluent reason, you know. And basically they just go and do stuff like that. That's actually a cross, pretty much right after. So that's a decent reason for entry. You can have a very tight stop loss, and your target's pretty big. That's how you win in trading, guys. Big winners and small losers. You know what I'm saying? And then your stop loss would be like right here. So that's really all I wanted to say for this video. I'm going to be sharing a few strategies to trade with, taken from Gan's books. They're going to be quite simple, so that they can actually be used and focused on psychology, volume. Okay. So what do you guys think about this count here? How it lines up exactly perfect? What do you think next year is going to bring for Bitcoin? Let's take a look at what we got here on our watch list. We got crypto watch list, That's what I got. I got Bitcoin only right now, individuals, and talk about the altcoins very soon, very soon. Probably. So if you guys remember this chart, we actually hit 3 trillion. It became a resistance. Oh, that's not right. I don't think so. I get why I did that, but 3, 4, 5, maybe, and this becomes. That's why it's important to take a look at the. Yeah, I mean maybe, right? The other charts here, the indexes. Wow, that means that we have a huge fifth wave on the upside, which is good. 1, 2. This is going to be 3. Come up with the 4. Shallow retracement. Yeah, shallow retracement, man. Why? I'll show you. It's called the rule of alternation. But it's actually not a rule, by the way, guys. It's a guideline. So it's a guideline, not a rule. Forgive me if I'm wrong, but I'm almost positive it's a guideline of alternation, not a rule, which is very, very important to know the difference. So in this Fibonacci, I'm looking for how low it retraced, and I think I honestly retraced very close to 90%, like 90%. That means that the rule of alternation, that we'd only retrace like 10% or 14% of the wave 5, which is like this top right here. I wouldn't be pulling it like that, but yeah, there's some charts that comes to mind right now that, let's see if I can do it on the total because I have it clear. Oh, I don't. We had a huge extension in the fifth wave right here. Fifth of the fifth. I mean fifth of the third. Sorry. 4. 1, 2, 3, 4, 5. I forgot about these charts. These are actually pretty good charts. Yeah. I was using log scale. It hit the 61.8. That's why I was doing it. Is the Fibonacci guideline. Wow, this is really good. The fifth got as a guideline hits the 236 right there. You see the 236? Yeah. So it's important to add that moving average to your chart. Look at all the volume that came through right here. That's a doji indecision candle. If we continue upwards, it's probably going to come up. It's going to pop up, I mean, you know. But if the market makers are selling out here, like who's buying this? It must be the public. Are they at least a little bit strong? Yeah, I remember this wave count. Wave 4. Yeah. What do I have on the other one? Yeah, this one's clean. Because what I was going to draw here, this to me, this is total 3. So to explain it, total 3 is everything in crypto except Bitcoin and Ethereum. So it's excluding Bitcoin and Ethereum. That's the total 3. That means Ethereum is getting bigger. So this, you can see 1, 2, 3, 4, 5 waves pretty clearly. If we add the Fibonacci, we expect, this is on log scale by the way, it just looks better on log scale right now, especially if you use these. So this is this 1618, like it doesn't work if I don't use log scale. Some people advise against using log scale, but I mean, what are you going to use, man? Like this? No, doesn't make sense, right? I mean, not really. Not on these charts, not on long term. Like Prechter, Robert Prechter, he uses log scale. Even Elliott used the log scale in a long term chart. You know, what's his name? Elliott, the guy that made the wave or found the wave principle, he uses log scale as well. That's way back 100 years ago. So, by the way, this is an index. You can't trade this chart. So we have to keep that in mind when we're trading it. Yeah, these are good indicators too. Look for momentum. We know that in wave 5 there's momentum divergences, right? Momentum divergences from wave top of wave 3. That was wave 5 right here. There was small momentum divergences. If you actually go to the monthly chart and see if where's the momentum divergences, right? So the histogram's actually peaking right now. It's actually coming upwards. That's cool. I don't have a pattern for that one. I don't know about this one in the 5th waves. Like, aren't we supposed to see a momentum divergence? That's a really good question. I bet Philicon would know the answer to that question. But for this indicator right here, definitely we are diverged. Like a little bit at least, because we can continue upwards. The RSI is still going to be a lower top, with a higher top in price. So spinning top candle we had, that was a lot of volume. Keep in mind this is the total 3. So what was I saying? I was saying that this might be the 1, 2 in total. And if we counted this for the main one right here, total, I know this doesn't really look like it right here for the 3rd wave, but just keep in mind, okay? This is 1, 2, 1, 2, 3, 4, 5, 2, 4, 5, continuation until the new year. Remember the first chart that I showed you on Elliott for the Elliott wave theory? That it closed at the beginning of the year. Right, so it's important to know that. Why? Because, well, if it's going to be the 4th wave to come down here, it might take about a year depending on how bullish we are. If the rule of alternation holds true, this one I have to put on log scale. If the rule of alternation holds true, I'm not sure if it would use the log scale or not. If it doesn't, it's like 10% is like right here. But a higher retracement. Wave 4 usually hits like the 382, but if it's in a bull market, because this is what I'm looking for, right? I'm looking for this one right here. On this chart it doesn't work because we actually broke the low, but I'm not looking for this chart as just an example as this one here. So I mean, this basically tells you that most of the altcoins, a lot of them are kind of bearish against Bitcoin and Ethereum. A lot of them. Some of them might be very strong, but a lot of them are like have less support at these panics right here, at these panics, but seems to have more bullish pressure near the end of the bull campaigns. So yeah, that's all for this video right here. This thing can continue though, like that. Let me add you. Look at the 236 right here. Keep in mind 2022. All right. Hope you guys liked this video.